Okay, welcome back to probably one of the most boring market updates that you could wish to ask for. However, hidden within the boredom and with the flatness of the market, there will hopefully be some words of wisdom that I can impart on you, and hopefully will improve your experience through this particular piece of price action that we're currently experiencing in the markets. So we'll dive into ETH as kind of our starting market here, and really the core of the discussion of what we'll be going over today. ETH has slowed down in terms of its volatility quite dramatically. Nothing has changed from that higher time frame perspective in terms of we got a weekly close that held above the low that we want to see holding. So higher time frame market structure remains intact. But we're now in a period of time in which we've had that very, very significant aggressive move in the market, and the market is beginning to chop now between levels, and it's starting to do the classic thing of punishing the over traders of these regions. And so when you're on the back of, and it's only 1 week ago, when you're on the back of that very big sell-off and that very aggressive volatile patch, we naturally have this tendency to want to try and retrieve value back from the market. So that's when people start to overtrade. They start to potentially over exaggerate the moves that we see in the market. The psychology is a little bit out of line, so our expectations become more heightened. We start thinking about things in kind of very aggressive forms. So we start thinking about like V reversals, or getting the bottom, or another leg down to $1,000, or we tend to start thinking in kind of the extreme ends of the scale whenever we're thinking about trading during these regions, and the market typically punishes that outcome. And that's exactly what we've seen from ETH here on the lower timeframes, and obviously represented across the majority of markets here from that perspective as well. And what you can see on ETH in particular is the way that we've basically now, over the last kind of few days since the weekend through here, now just begun shopping through this region here. And what we're actually seeing is ETH start to trade within an $80 range. It's got very tight down here. $80 range back and forth, holding this level as resistance, this level as support, having a wick down, and here we are. So actually the volatility has slowed down to levels that we haven't actually seen in a considerable period of time. Even these levels here were greater in terms of dollar value being moved, and here we're now just starting to really slow down in terms of the volatility that we're seeing. And what that can cause is a really difficult patch for traders, because if you're still in that mindset of over trading, this is going to be causing you some kind of pain through these regions as you're looking to recoup some of those losses. But what it's also doing is meaning that we're starting to add additional narrative and thought process into the boring price action in anticipation of the next move. And that's also the really difficult part that comes with periods of price action like this. What we get to begin with is we get these kind of moves that happen, and then we get the over trading, and we suddenly get to a point. It can take varying lengths of time depending on the individual involved, but it gets to a point where then suddenly we look back and we say, shit, it was just chop. After all this time of me over trading and thinking that we were going to get this big upside V reversal or this aggressive move back lower, we just chopped. And suddenly, it's almost as though the sky's clear and we can see everything perfectly all of a sudden. And we just say, shit, it was just chop. But then what starts to happen is once that overtrading period ends, we then start immediately moving towards the next step, which is the anticipation step. And the anticipation step is just another form, another veil of overtrading. So during the anticipation step, we're now saying, well, now we've been chopping for a long time. Which way is this going to break? Okay, and then we start adding again that exaggeration element to each of the lower time frame moves we see. We start seeing ETH with a few strong 5-minute candles, and we start anticipating the upside break, right? And vice versa on the downside. So this choppy area for the market is really difficult for the majority of people to be able to handle. And it's actually why a lot of the time, the aftermath of the large moves are actually more destructive to people than the moves themselves, because this is where we start to go into tilt mode. This is when we start to risk more. This is when we start to crank up the leverage. And these can be really destructive moments in the market for a lot of people. So right now is really important that psychologically you're switched on to what the environment is doing, and you have your criteria for what establishes a strong move and a strong kind of outcome away from these areas. So what we want to do is we want to make sure that we are taking the market at face value to begin with, which is saying this is now a choppy area of price action for me. But where does that change? What is the highlight point for you that says this market is now clearing this chop and I am feeling confident about there being upside, keeping in mind some of those psychological pitfalls that we can find ourselves in? That's going to be the next really important step. And then when we zoom out to look at the higher time frame for ETH, and we look at kind of what's taken place through these areas, you can see here that this is a weekly chart. And this weekly chart here is just a reference point to two other major sell-offs we saw that had wicks back to the upside. So this one here was the original one that we had back in 21. We saw a hugely aggressive candle to the downside. We saw a very decent wick back up here. And for the next 2 months, we just chopped into the downside. So what we ended up doing was backfilling some of this wick here, coming back down again to the 1700s, before eventually producing this fresh leg here to all-time highs. Another candle that had a strong wick was this one here back in the summer of 24. And at the end of that, what did we do? We chopped around for 2 months to the downside. We backfilled some of this wick. We nearly got to the bottom of this wick. And then we came up here to our fresh high for the year in 2024. In this situation here, I would not be surprised to see us do something similar. Once again, we know that bullish structure remains on ETH, however horrific it sounds to say that, and however much you think that I'm incorrect in that thought process, the bullish price structure remains in terms of what we have here from a higher low perspective. And on the monthly chart, we also know that anything under 2,500 has been holding as a support region. If we got 2 months of chop through here and we started to backfill some of this wick, conditions would be pretty rancid on the social side of things. There'd be a lot of disinterest in the market. There would be a lot of people that have blown themselves up in the aftermath of what we've seen across the markets, and then the overtrading period that people would experience on the back of that. But this is probably a likely outcome for the markets in the way that we currently are. And given that we can only ever react to the last thing that we've seen in the market, we can only ever react to the last piece of significant information the market has given us. That is that we've had this very strong sell-off candle and that we're now in a patch of lower time frame consolidation. Now, the next thing that we can look for, like I said before, when we're looking for these clear signs of change is exactly that. What is going to represent to us that the market has its strength back and the ability for us to try and rally into the upside or continue to the downside. So they're the factors that individually, and I can't give you those, they're subjective and dependent on you and the way that you view the markets. But that's what you need to think about now. How do we look at these markets and how do you determine when strength is coming back in? The other thing that you should be doing during patches of time like this is identifying the areas of opportunity for you. Now, those areas might be on individual markets. For example, Altcoin is something that has incredibly high volatility. You can trade it on the lower time frame. You get a huge fix of volatility there. There's the option to make a lot of money if you have a system that can correctly identify setups on the lower time frame. Altcoin is literally going to be the best coin that you can trade right now. And that's what you have to look for in this environment. You have to seek out the value. The value isn't just present in the majors as it stands right now. Higher time frame, there's nothing wrong with them. Spot perspective, there's nothing wrong with them. But lower time frame, I don't think they're going to give you the value if you're looking at actively trading. So you need to find those markets that either are going to act completely independently to what's going on in the majors, and they might actually benefit from a choppy period in the majors. Sometimes alt setups produce really good signals when BTC and ETH and the other majors are in these kind of choppier regions, and independently they're markets that you can then trade, because potentially the anticipation of larger moves on the majors is reduced slightly. It might be that you go to other markets altogether. It might be that you explore TradFi and you start trading the indexes, or you look for options in stocks. But you have to be able to seek out the value in the market in the way that it currently is. And most importantly, you need to be able to manage the psychology of what's going on lower time frame around these areas, with very clear criteria in place to what's going to be a green light for you to get back involved in the market in a bigger way if you want to sit on the sidelines until then. So right now, the pitfalls of this market are overtrading the chop. It will then become overtrading the anticipation of which way the chop will break. And what you really need to do in order to be able to counter that is to be able to have your fixed signals that say, if this level is reclaimed, if this level is lost, then I see that as a green light for getting back involved in these markets with a decent risk reward, or a higher probability of there being a play out in my intended direction. So there's not a lot to do apart from endure the psychological battles and ensure you're winning on that front. This isn't the opportunity in the marketplace in which you're going to be able to turn a huge amount of profit. For the majority of people, it's going to be an opportunity to lose more money. So right now, it's really about, can you avoid those pitfalls, and can you begin to plan and structure your thought process around when this market is going to give you that green light again?